Hey everyone, I'm Tanisha Broadway, also known as a Loan Diva, and welcome to Loan Talk with the Loan Diva. I'm so excited to launch my educational series, The Mortgage Playbook, where I'm going to break down different loan programs. I'm going to talk about how they work, who they're designed for, and really just give you the option so you can figure out what scenario could fit for your unique situation. So today we're going to talk about bank statement loans. Let's get into it. If you're self-employed and you ever look at your tax returns and you was like, nope, I'm not going to qualify with a mortgage with these, well, then this episode is for you. So let's start with the basics. What is a bank statement loan? A bank statement loan is a mortgage typically for self-employed borrowers where maybe your tax returns are the challenge and you can't qualify traditionally. Well, the lender is going to take a look at your bank statements, either 12 months or 24 months, and create an income based off of how your bank statements are looking. Now, this could be personal or business bank statements. And I want to be clear, this is not a no-doc situation, right? You still got to qualify. But what they're using are the deposits on your bank statements to figure out some sort of income. So they're still verifying, right, the business and how long you've been in business, and you have to have all those things in place, right? They're looking at your deposits, or they're calculating business expenses, right? And they're coming up with an income. And so this is a great loan for self-employed folks in various industries. For example, real estate agents, investors, hairstylists, barbers, truck drivers, consultants, content creators, entrepreneurs, Uber, Lyft, anyone who is self-employed who just can't verify their real income based off of their tax returns. Now, who is this not for? Just because you're self-employed doesn't mean this might be the right loan for you. If your deposits are inconsistent, if your business isn't producing enough income, if your bank account has frequent overdrafts or NSFs, insufficient funds, or if you just don't have an established business, this may not be the best option for you. So how does this work? This is where the confusion comes in. So I want to clear this up. Let's say the business deposits $30,000 every single month. No, that does not mean that your income is $30,000 a month, because we have to take into consideration business expenses. Now, depending upon what investor is being used, the lender may use the CPA's expense statement or a P&L to determine your qualifying income. So in other words, it isn't just adding up deposits, right? There's a process to this. The underwriter is going to do their due diligence. So here's a couple common myths. I write everything off, so I'm not going to be able to buy. No, not necessarily. That's why these types of programs were created. Oh, that's an easy loan. Well, no, not necessarily. It's just a different type of loan. Okay, similar processes, meaning that it has to go through underwriting. You still have to qualify. There's credit, right? You need a certain score, things like that. It's just different. So what are lenders looking for this type of program? Stable deposits, consistent income, down payment, cash reserve. So this is not a first-time homebuyer program. You have to come to the table with some money, and just the overall strength of your profile. Remember, every investor is different. Okay, it's not just a one size fits all. There's different nuances with this program with the different investors that we have available to us. For example, some investors allow financing into the millions, while some are capped at 80 or 90% loan to value. And even different credit requirements for the different investors. Like some investors will allow credit scores in the low 600s, which means you don't have to have perfect credit to use a bank statement program as well. So let's look at a real life example. Say you're a real estate agent and you make 20 grand a month. You definitely make that. But when you file your taxes, right, after all your deductions, it's way less than that on paper. So the challenge is now you can't qualify to buy a home using your, traditional qualifications like your tax returns, because the picture doesn't paint what your cash flow really is, right? That's the challenge. And so with the bank statement program, we don't have to deal with any of that, right? We're looking at your deposits. We're looking at the strength of that in order to create an income so that you can now qualify. Now, the advice that I give my clients all the time is don't disqualify yourself. Let me be the one to tell you that you're not quite there yet. But then also let me be the one to help you get in position to get ready, okay, to be able to qualify for these types of programs. I've had so many conversations with clients who just automatically disqualify themselves thinking that conventional or FHA was like the only option, when in reality it is not. There's way more to the story, as you're discovering through my mortgage playbook, period. Now, of course, every investor is different. different. I have a pool of different investors that I work with based on your unique situation. We can find a solution that fits what you're trying to do. Loan approval is definitely going to depend on your full financial picture, right? How much reserves, what are you putting down, your credit score, your assets, the type of property. Those types of things are definitely going to play a role in the underwriting to determine your eligibility for this particular product. So don't take this video as you're automatically approved. Let's go this direction right now. Let's do it. No, take it more as an invitation for the conversation. I like that. Did you like that? Yeah, I like that. So again, if you're self-employed, okay, you've been told no before, or you're counting yourself out because maybe your tax returns are looking a little, this may be the loan scenario for you, a bank statement loan. Now, we need to connect so I can look at your individual situation and figure out what we need to do to get you in position, because when the Loan Diva is involved, we making things happen, period, okay? Well, you guys, I appreciate you joining Loan Talk with the Loan Diva. Until the next episode, all right, y'all.